Fair value gaps are one of the most consistent edges I've been able to find in the market. In this video, I'm going to show you exactly how to find them and how I trade them for high probability entries. So whether you're scalping or a swing trader, I believe this can help you. Hey everybody, welcome back to the channel. If you're new here, my name is Myke, and this is the Day Trading Musician channel. I'm all about helping you build a repeatable system that's based on price action and structure in the market. In today's video, we're going to dive into fair value gaps, what they are, how to spot them on a chart in real time, and why they've become one of the core setups in my trading strategy. So whether you're trading the ES, the NQ, SPY, or any individual stock, this concept can kind of work across the board. So let's get into it. So first, what is a fair value gap? A fair value gap, or FVG, is a price imbalance on the chart. It's usually created when one candle moves in such a way, like with velocity, it moves up or down, and it leaves a gap between the wicks of the candle before it and after it. Okay, so in this example, we're going to use today's chart. This is Friday, June 13th. It's my birthday. We are going to take the low of this candle and the high of the candle before the imbalance candle. And I have an indicator on here that shows that's where that imbalance is created and your fair value gap is formed. You can draw it on the chart yourself, or you can have an indicator that does it for you in a program like TradingView, Thinkorswim, or whatever you use. So basically what it does is it signals that there were unfilled orders sitting in that area. Price often then comes back and revisits like that zone before continuing on. It's not a given that it has to. As you can see right here, I was actually waiting for this trade to come to me, and it never did. So it doesn't always have to come back to it, basically. As you can see here, it did. And sometimes it will do this. It will wick down through it and then pop right back up. That's part of your trade psychology and where that has to come in, and just having patience and trusting your analysis. But we'll talk about that in other videos. Okay, so moving on to the next thing. How do I confirm it with structure? I don't just want to take every fair value gap I see. I want confluence. So for me, I'll often pair it with trend lines, supply and demand zones, or failed breakout or breakdown setups. That's kind of my three core things. Okay, so here are kind of my exact rules for entering and exiting. I would wait for price to enter a fair value gap zone, as such right here. So then I want to see some kind of reaction. Typically, I want to see it wick from the middle of the fair value gap at least out. Most of the time, I will enter at the top of the fair value gap because there are times where it'll just touch it and run. But then you also have to know that if you're going to do that, you may be willing to have to hold like here and allow your play to work out. So this basically, because it's a 5-minute, this took 10 minutes to play out fully. You have to be willing to have your trading psychology at a level to where you can withstand that. Okay, so again, I wait for price to enter the zone, and then I want to see, is the candle going to wick out of there? Does it stall, or does it give us a reversal candle back the other way? And my stop typically goes either just below this or just below the imbalance candle at the bottom. Sometimes I'll put it just below the fair value gap. On this one, I believe I put it just below the fair value gap and ended up actually, I think I actually ended up getting stopped out. I know what this is showing with the indicator, but I think I actually ended up getting stopped out because it wicked below and then continued. And sometimes that happens, and you just have to be okay with knowing that you're not going to win everything, but you are setting yourself up for the best possible outcome by entering and having your stop loss. Risk management is something that we'll talk about in another video, and that's going to be key to your success. Okay, so for targets, my first target is generally going to be the 1 hour high. So I don't have that indicator on right now, but the previous hour's high, let's see. If we are here, the previous hour's high, which would have been 8 to 9, would have been right here. So that's what I'm looking to target. And then there was also some other confluences I had on this trade specifically. But in terms of a normal trade day, what I would be looking for is that previous hour's high as my exit target. So that's pretty much it for a fair value gap trade. It's very simple rules, it's tight risk, and there really are high probability if you have the patience and the trading psychology to allow that trade to work out in your favor. Okay, so real quick, this is a trade I took yesterday based on a fair value gap. I'm going to be transparent with you that I exited early. I still made my profit, and I was happy I didn't make as much as I wanted to make. But that goes into the trading psychology that I was talking about. So I'm not perfect. I don't claim to be perfect. I claim to be learning and sharing as I go. So here you can see we climbed up and up and up and up and up, and I kept waiting for our fair value gap retest after we would create imbalances. This is a 1 minute chart with 5 minute fair value gaps, and that's personally what I like to trade. Quicker entry kind of thing. That's my thing. But as you can see, we climbed up and up and up. And I like to also think of the market every day as it builds. It's kind of telling a story. And the story of yesterday was this yellow line was where it was wanting to go. Everything was moving that direction from the way the market structure was moving that day. And for me, we got close, and I said, okay, we're obviously going to get there. And we kept moving through these supply and resistance, supply and demand lines right here. And I entered on this one as soon as it hit it. And then, like I was telling you earlier, it wicked out of there and then did a reversal. So that gives me the confidence to hold my trade, right, to our target. Well, then it started to do this back and forth thing, and you can see it consolidated here for almost 10 minutes. And there was a resistance line here that it just kept bouncing off of, and it kind of started to hit at my confidence. But we eventually hit the target. And I've put in 6 years of watching the charts day in and day out, and I can tell you that most of the time your analysis is right. If you're really doing the work and you're really putting in the time, you have to trust your analysis and you have to let your trades breathe. What I try to do personally is I try to get the best possible entry because I know my psychology isn't always tolerable for a lot of drawdown. Some people are okay with big drawdowns. I don't like it. So I try to get the best possible entry. I'm not trying to go for home runs per se. I'm just trying to go for really good trades. And all I need is one to three really good trades a day, and I'm good. If it's one really good trade, I'm good for the day. I didn't used to be like that. I used to be scalping this thing left and right, losing money on commissions. But I don't have, that will not get me profitable in the long term. So this is what we're looking for when it comes to fair value gaps. And the same is true to the reverse side. I don't like to short a lot, so I don't always take fair value gaps to the downside. Just because the way that the market's structured, it typically likes to go up more than it likes to go down. And when it goes down, it rips down. So, okay, so that's my take on fair value gaps. And if you want me to go deeper on how I manage my trades after entry or attempt to, you can comment the word gap below so that I know what to cover in the next video. I will be having some other videos come out We're going to be talking about risk management and things like that. Stuff that will keep you profitable in the long run. Even if you're not making huge gains, making sure that you're not taking huge losses is a big part of that as well. So, if you found that helpful, please be sure to subscribe, and I will be dropping new videos every week with real chart examples like this, and live trade breakdowns will also be coming. I trade live free, 2 free streams a week, Tuesday and Thursday, 8:30 to 10 Central Standard Time. There is a link for the free Discord also for that in the description, so be sure to sign up. I have some free stuff down there for you as well, so click those links as well. My 3-step checklist is there. And if you want to sign up for the paid Discord, I would be trading Monday, Wednesday, Friday, same times. I'll be trading the whole week, but Monday, Wednesday, Friday is for the premium paid Discord, which you can find in the Discord under subscribe when you sign up for your free account. Thank you for watching, and I'll see you in the next video.